What's up, everybody? I wanted to go over the new chart in TradingView. It's not really something that is, part of QuantVue, but this is in TradingView, and it's something that you can add to your arsenal as an extra chart of confluence while trading with the QuantVue system, right? So what you're going to want to do is you're going to want to open up a chart, put it on 1 minute on NQ, right? You're going to go up here to charts type and go to volume footprint. Once you have the volume footprint up on your chart, what you want to do is go into settings and you're going to leave everything the same. What you're going to do though is you're going to scroll down and you're going to increase your imbalance from 300 to 400 or whatever it is on default, change it to 400. It'll filter out a lot of fluff, and you want your stack level checked and you want to turn that to 3. I like 3. I think it's a sweet spot specifically for NQ. Now, once you do that, your chart will look like this. Something to note is that the stacked imbalances on TradingView going backwards more, it looks like 48 hours, is incorrect. All this stuff back here is not correct. And I hope in a future update that they'll just let you turn that off, because this is just nonsense. Like none of these stacked imbalances are real, right? It's just the way that they're like storing the data and it's applying. But all of this stack imbalance from this point going forward is real, right? So we're going to look at this and kind of explain what this means. So basically we have a stacked imbalance. When you have a stacked imbalance, it's going to highlight like this, right? So you can see 1, 2, 3 in a row, right? And then once you get at least three in a row or more, it will highlight it like this. It will highlight it like this, right? So you can see right off open, we have these really a lot of strong buyers, right? And sometimes when we have really strong stacked imbalances, when we come back through, right, that this is a level that potentially these buyers might not get taken out and it could bounce, right? Or you could rip through it. And this is like the problem with people that just trade stack imbalances, right? What people don't know is that there was a pivot right here, right? And this pivot is critical, and this is market open. You will see stacked imbalances off market open that will rip up and then come right back down. This will happen, right? The problem is that it doesn't always mean that we're going to bounce, right? And once we take out all these buyers, this stacked imbalance, right? Now this is very, very, this is very bearish, right? As we're coming down through here, you can see we form a couple more stacked imbalances down to the down to the downside. And notice that once we come down here and we make this W pattern and we come up to retest it, notice where we retest and then fail before coming back through that stacked imbalance. You see, so this is why the stacked imbalances are so important, because it's one, it can be a really nice area to scalp, right? You can scalp stacked imbalances. If you are looking at this, you're seeing the stacked imbalance there. You look over at your Renko chart, you're like, okay, are we going to reject off of this? You're looking at your 1 minute, are we going to get a wick off this, right? And if you do, boom, that's a great little short right there for a couple points, right? And you can see the other thing is, like, when we don't have strong buyers and we don't have strong sellers, right? It just looks like this, right? Kind of choppy, right? This is choppy. We're chopping in a channel, right? We are getting no stacked buyers. We got 3 stacked sellers. If you look really quick, 3 stacked sellers right there, immediately taken out though, right? So we're looking for stacked imbalances. We don't really get any stacked imbalances. Kind of choppy for the rest of the day, right? Here we have stacked shorts, right? But again, this is like 230, right? So we have stacked shorts. It could be a sign that we're going to push down really quickly, right? Once we take out these stacked sellers, right, now we're bullish again, right? That's kind of the concept, right? We have a bunch of, chop right there. And then we have, here's this level again, right? Now keep in mind if you keep the same concept of like previous resistance, right, can become support. You can kind of apply that same idea to stacked imbalances, where it's like, okay, this was like a high level of sellers, right? And it took a lot to get through it, right? So when we come back down, where did we bounce? We bounced right on top of the stacked imbalance, right? once we come back through, we form another stacked imbalance to push back down through that same level, right? And it's just another way of kind of identifying key levels. So if we look at it today, starting at 9:30, right? If we look at it from 9:30, actually, let's turn on electric hours. Yeah, let's turn on electric hours on this chart so we can see today a little better. Turn on electric hours. So the reason why I'm turning on electric hours is because 8:30 was important. Look at the stacked imbalance on that rip down, right? And you can see this last stacked imbalance where we had these 3 stacked imbalance, right? Look what happens. So, we had a lot of stacked imbalances down here as well, right? Through here, but outside of this one where we chopped, right? Once we came back up to this stacked imbalance, look what happened. We pushed down, right? So, is that predictable? Kind of, to a point, right? This will help out with your scalping, I think, greatly if you using this in conjunction with, smart money concepts, with the Rincos, with the Q Pro. Dude, you can get some amazing entries scalping imbalances or learning how to scalp imbalances, right? Now, does this mean that we will bounce off of this? No, but it means that as we approach this level, you should be looking, are we going to reject off this level? If we do reject off this level, can you react, right? Once we come up 44, right? As we start to turn on the Rinco, right? You're going to see a Rinco print negative right about here, right? Can you jump in that for a couple points, maybe 10 points? That's 10 points right there. That's 20 points. That's a 20-point move down off that imbalance. And it's very, very clearly there. It's not like might be there, might not be there, right? It's clearly there. So, we did have some chop before the dump today. Let's see, where's the 9:30 open? 9:30 open, it was just nasty all over the place. But again, if you're looking at higher time frames, you would have known that like we came up to a pivot, right? Which was lined up with all this stuff over here, right? We almost came all the way up to this imbalance, but we didn't quite touch it. And we came down. Now we came down again, right? Now, what's interesting is at first it looks like buyers might step up, and we do, right? But when we come back down, those buyers get taken out, right? So now the buying side is, in my opinion, one way of reading this. I know people are going to disagree with this, but it's like one way I see this is like, okay, unless we form another bullish imbalance on this side, right? We just took out a lot of buyers this push down, right? So if we come back up and we push down again, and we see, we're seeing this, right? We don't have this imbalance to bounce off of anymore, if that makes sense. It's already been taken out. So these are things that I keep an eye on, right? So now we're starting to look bearish. We're forming lower highs, lower highs, lower highs. And so these are things that I look out for. We have this bullish imbalance. Right after we have this bullish imbalance, we have an immediate push, right? Once we take this imbalance out, now I'm bearish, right? Where am I bearish to? Maybe here, maybe this level. We could wick off this level. Do we know? We go through it and we form another we have another imbalance to push through it, basically, if that makes sense. It's a little hard to get used to the idea of potentially trading this way. But again, this is where you're not using this to take your trade. You're using this as an extra confluence to take your trades. That's what people don't understand about footprint charts, I think. Some people, there are scalpers out there that just use a footprint chart to take their trades. That's not what I'm telling y'all to do. I'm telling y'all you should use this footprint chart and stacked imbalances, right? To add extra confluence to trading the QuantVue system, right? Also gives you a really nice idea of where we might go up to, right? So I guess like let's see. Let's see if we have a good one here. Sometimes it doesn't work, right? Like sometimes it doesn't work perfectly. You can see we have a lot of buyers and a lot of sellers are stepping up. It was very choppy coming down, We are in this channel though, right? And we did break out of this channel and just tank again. I mean, it was a really, really tanky day, but I think it's easy, especially on this one. Once you start seeing these sellers imbalances like this, right? Dude, don't try to hold against this either. I think that's another thing, right? Like if we're chopping sideways, this is actually kind of cool. So like say we're chopping sideways and you enter along here, right? You could try to hold it, right? I probably wouldn't, but you could try to hold it, right? But if you're holding a long and you see a stacked imbalance on the seller side like that, get out. Do not hold that. Do not attempt to hold that. Get out. There's no ifs, ands, or buts about getting out on that. Right? Small stacked imbalance, maybe try to hold through it if you want to. If you have a reason to, you can. Right? Whatever. You see 1, 2, 3, 4, 5, 6, 7, 8 stacked imbalances one direction. No, nope, nope, nope. Do not be on the opposite side of that. That would be silly, ridiculous, right? Same thing. You can see as we're pushing, man, just we're just making these crazy stacked imbalances, right? Crazy stacked imbalances all the way down. Once you see stacked imbalances like this, right, on a rip down, I would not be looking to trade this long, even if we're potentially coming along, right? I would want to see a lot of stacked imbalances taken out before considering getting long. At this point, maybe I might consider looking for longs, right? Because we took out a bunch of stacked imbalances here, right? But again, draw your trend line, look at the overall market, look at pivots, right? Is this the top of a pivot? If this is, probably don't try to long that, right? There's so many other things. Again, you're not just using this chart. You're using this chart as an added confluence. And this is just how I trade stack imbalances. And I know for a fact that people are going to gripe probably in the comments about my, my, limited understanding of stacking balances, or that I'm not using the right terminology when it comes to this. I don't need to know, like for me, it's like, I don't need to zoom in and look at every delta of every single candle, but all that data is there, right? I just find what's useful for me scalping, right? And then how do I use that to my advantage? And how do I use that as an extra confluence? And this is something that I have done in the past, scalping. And the fact that it's now in TradingView is something that I think is a great tool, especially because it's free, right? Getting stacked imbalances like this to print on a chart usually costs money. Like usually you have to pay for extra data fees or extra things to see it, right? This, you don't have to with this, right? So I think it's a fantastic thing. I highly recommend it. Adding it to your chart, having it there as confluence as you're scalping with the Q Pro. That's it for this video. Make sure you guys like, subscribe to the channel if you guys haven't already, and I'll see you guys in the next video. Peace.